For years, Revolut has been the financial app that millions of people in the UK used for everything except trusting it with their actual money. You would use it to split a restaurant bill, to avoid foreign transaction fees on holiday, to send money to a friend at midnight without paying the ridiculous charges your high street bank would levy for the same thing. But your salary, your savings, your rent money, that stayed in Barclays, in HSBC, in NatWest, in whatever bank your parents have recommended when you were 17 and have never quite got round to leaving. The reason was simple and entirely rational. Revolut was not a bank. It was an e-money institution, which is a regulated category, but a fundamentally different one. And the difference matters enormously when something goes wrong. That has now changed. In July 2024, after a 3-year application process that became something of a running joke in UK Fintech circles for how long it was taking, Revolut was finally granted a full UK banking licence by the Prudential Regulation Authority. It is one of the most significant moments in UK retail banking in years, and if you are one of Revolut's 10 million UK customers, or if you've been sitting on the fence about whether to use it more seriously, you need to understand exactly what this means and what it does not mean. Because some of what changes is genuinely significant, and some of the excitement around it is worth approaching with a clear head. Let's start with the thing that matters most to ordinary customers: deposit protection. Before Revolut had a banking license, your money sitting in the app was not covered by the Financial Services Compensation Scheme. The FSCS is the UK's deposit guarantee scheme. It means that if your bank collapses, you get up to £85,000 back automatically. No questions, no lengthy claims process, no hoping that the administrators find enough assets to cover what you are owed. The government backs it. It is essentially the bedrock of confidence in UK retail banking. E-money institutions like the old Revolut operated differently. They were required to safeguard customer funds, meaning they had to hold them in segregated accounts at authorised banks rather than using them for their own business operations. In theory, this was safe. In practice, if something had gone seriously wrong, you would have been a creditor in an insolvency process rather than a protected depositor. That is a very different situation. Now that Revolut is a fully authorised bank, your deposits up to £85,000 are FSCS protected. That is the single most important practical change for customers, and it should not be underestimated. It removes the primary rational objection that financially literate people had to keeping meaningful money in Revolut. This is what unlocks everything else, because the real significance of the banking license is not what it changes today. It is what it allows Revolut to build tomorrow. As an e-money institution, Revolut was fundamentally constrained in the financial products it could offer. It could move money, it could hold money in a limited way, it could offer some savings products through partnerships with other institutions, but it could not lend money directly in the way a bank can. It could not offer mortgages, it could not extend credit directly from its own balance sheet. It could not do the core thing that banks actually do, which is take deposits from customers and use them to fund loans to other customers, capturing the difference in interest rates as profit. With a banking license, all of that changes. Revolut has already indicated it intends to move into lending products in the UK, personal loans, overdrafts, and potentially further down the line, mortgages. These are the products that drive real revenue in retail banking, and they are the products that would allow Revolut to genuinely compete with the major high street banks, rather than just sitting alongside them as a supplementary app. That competitive pressure matters for you, even if you never switch your main account to Revolut. Competition in banking, when it actually functions properly, drives rates up on savings and drives rates down on borrowing. The entry of a genuinely ambitious, technologically agile competitor into the full banking market should, in theory, push the legacy banks to offer better terms to retain customers they are increasingly at risk of losing. The Competition and Markets Authority has repeatedly found that the UK current account market lacks meaningful competition. Most people choose their first bank as teenagers and never leave. The switching rate in UK current accounts is extraordinarily low, which allows established banks to offer relatively poor rates on savings and relatively high margins on overdrafts without facing real consequences. Revolut becoming a bank does not fix that overnight, but it adds a credible, well-funded, technologically superior competitor to the mix in a way that has not really existed in UK retail banking before. Now let's talk about what does not change and what you should still think carefully about. The banking license does not automatically mean Revolut is the right place for all of your money. There are still important questions to think through. The first is the question of maturity. Revolut is still a relatively young institution taking on the full responsibilities of banking regulation for the first time. The Prudential Regulation Authority will apply significant scrutiny to how it manages that transition. The requirements around capital adequacy, risk management, and operational resilience that come with a banking license are substantial, and they are things Revolut has not had to manage at this level before. This is not a reason to avoid Revolut, but it is a reason not to treat it as equivalent to a bank that has been operating under full regulatory oversight for decades. The FSCS protection covers your deposits if things go catastrophically wrong. It does not insulate you from disruption, technical problems, or the growing pains that come with a company scaling into a more complex regulatory environment. The second thing to think about is that Revolut's business model is still evolving. The app makes money through subscription tiers, foreign exchange margins, interchange fees on card payments, and premium features. As it moves into lending, the dynamics of how it generates revenue will shift. That is not inherently concerning, but it is worth paying attention to how its products and terms evolve as it transitions from Fintech disruptor to regulated bank. Banks have a long history of introducing products that are attractively priced at launch and adjusted later once customers are embedded. The third thing is the international dimension. Revolut operates across multiple markets and holds licenses in several jurisdictions. The UK banking license applies specifically to Revolut Bank UK Limited, which is a separate entity from the broader Revolut group. This is standard regulatory practice and entirely above board, but it is worth understanding that the FSCS protection applies to your UK deposits with the UK licensed entity specifically, not to any products or balances held under other parts of the Revolut structure. If you keep meaningful money in Revolut, it is worth confirming that it sits within the FSCS protected entity. The app should make this clear, but it is your money and your job to verify. So where does this leave you practically? If you have been using Revolut purely as a travel card and bill splitting tool, the banking license probably does not change your behavior much in the short term. It is good news in the background. Your money is now better protected on the occasions when it does pass through the app. If you have been a heavier Revolut user who has kept meaningful savings there, despite the lack of FSCS protection, you can now feel considerably more comfortable about that arrangement. The primary protection gap has been closed. If you have been sitting on the fence about whether to use Revolut more seriously as a main account, the banking license removes the single strongest argument against it. Whether the product itself is right for your needs is a separate question, but the structural objection that it was not a real bank and your money was not properly protected no longer applies. And if you have never used Revolut at all and are reasonably happy with your current bank, the most important thing to watch is what happens next. Revolut entering the full banking market with its technology, its user base, and its ambition should eventually produce better deals somewhere in the market. More competition almost always produces better outcomes for consumers, even the ones who never switch. The UK banking sector has been remarkably resistant to genuine disruption for a very long time. The major high street banks have maintained comfortable market positions despite consistently mediocre products and customer service that most people tolerate rather than choose. Revolut becoming a bank does not solve all of that overnight, but it is a meaningful shift in the landscape. And for the first time in a long time, the big banks have a reason to pay attention. For years, Revolut was the app millions of people used for everything except trusting it with their actual money. That calculation has now changed. Whether you change with it is up to you. Let me give you one more layer to this that most of the coverage has skipped over entirely. The Revolut banking license is not just significant for Revolut's customers, it is significant for what it signals about the future of UK retail banking more broadly. Monzo received its UK banking license in 2017. Starling received its in 2016. Both of those institutions have now spent several years operating as fully regulated banks, and both have grown substantially. Monzo now has over 10 million UK customers. Starling is profitable and has expanded into business banking in a meaningful way. The challenger bank model, which looked like an interesting experiment a decade ago, has demonstrated that it can work at scale. Revolut is larger than both of them combined in terms of global user numbers, with over 50 million customers worldwide. Its UK user base of 10 million is significant by any measure. And unlike Monzo and Starling, which have remained predominantly UK focused, Revolut operates across Europe, the United States, and a growing number of other markets. The UK banking license is one piece of a global regulatory puzzle that Revolut has been assembling for several years. What this means in practice is that Revolut's ambitions extend well beyond competing with Barclays for your current account. The company has consistently described itself as building a global financial super app, a single platform from which customers can manage every aspect of their financial lives across multiple countries and currencies. Banking, investing, insurance, lending, foreign exchange, business accounts, all in one place. The UK banking license is a foundational piece of that vision. Without it, Revolut could not credibly position itself as a genuine bank to UK customers. With it, the roadmap for what it can build becomes considerably more open. Whether that vision materializes as promised is a different question. The history of financial technology is littered with companies that described enormous ambitions and delivered something considerably more modest. Revolut has grown faster than almost any fintech in history, but it has also navigated a number of serious challenges along the way, including scrutiny over its financial reporting, regulatory concerns in multiple markets, and a high-profile culture debate that attracted significant press attention. None of that disqualifies it from being a serious banking institution, but it does mean that the realistic posture is cautious optimism rather than uncritical enthusiasm. Watch what it actually builds. Watch how it treats customers as the competitive pressure of being a regulated bank increases its cost base. Watch whether the pricing of its new lending products is genuinely competitive, or whether the banking license turns out to be a mechanism for accessing a more profitable revenue stream at standard industry margins. The best outcome for UK banking customers is that Revolut uses its technology, its user base, and its newly expanded permissions to genuinely shake up a market that has needed shaking up for a very long time. If it does that, everyone wins, even the people who never open a Revolut account. For years, Revolut was the app millions of people used for everything except trusting it with their actual money. That calculation has now changed. The question is, what comes next?